All right, I'm Peyton.
I'm Alexander.
I'm Libby.
And I'm Alora, and we are Alpha Financial. So Libby will now pass out some folders. In it, you will find our recommendations, your current budget and cash flow sheet, and then a final budget that has all of our changes on it. We try to hit all of your questions and concerns in our recommendations that you will see as this part of the slideshow.
So this slide is to address any of your misconceptions and your questions that you had for us. So first, to start, the health savings account, the money you put into that is not forfeited at the end of the year. It is actually an investment vehicle, and you are able to invest the money in that account and have it grow tax-free. And then for the season tickets, we decided that currently you should not renew them because, as you have discussed, we want to focus on college savings and also making sure we're retiring on time. So we're going to leave that until a later date. And then buy now, pay later loans is something that you use to purchase things like concert tickets, but we would advise you to either limit this as much as possible or try to only make purchases that fall within your budget, as buy now, pay later loans just add in an unnecessary expense to a good that you were already going to buy. And then obviously you must discuss this among yourselves, but combining finances we feel would be a really good option for you guys. You could set up auto pay so late payments wouldn't be an issue ever, and money saved is money made, right? So that would be good, and it would make everything really concise so you know where you're at financially. And then, Sophia, your business, we understand that in the future you may face some rising costs due to just cost of living and everything else. But we would like you to seek a supplementary source of income, not necessarily a different path, but something that maybe additional monetization for your business, like through social media or through teaching other small business owners what to do, but just to make sure that our flow of income is consistent and we can meet all of our financial goals, that's our recommendation. And then our tax withholding, we noticed you're at a very big tax refund of over $4,000. And we would like you to adjust your tax withholdings to lessen them so that you can have that money now rather than a refund, as it's better to have that money now than later, as it is a 0% interest loan to the government, which you are losing purchasing power on if your withholdings are too high. And then auto insurance changes. Sophia, Elena, the new 16-year-old driver, the auto insurance you should expect to see around a $250 increase on an already existing parent's plan. And then lastly, the smoker, we would advise you to not buy that right now, but it does look like something that will be completely reasonable to get in the near future once all of your budget is in the right place.
So first thing we wanted to look at here, if you would look under the first recommendation sheet, we have a copy of our monthly budget before. So we just laid out our monthly expenses. The required ones are listed in this blue teal color, and then our elective expenses are listed in yellow. As you can see, we have negative cash flow down at the bottom in this red box. Our expenses are going to be higher than our total monthly income right now, so we're going to try to free up some positive cash flow before we go into reassessing your budget. And so right now we have a budget that's laid out for like the next 2-ish years, and then we could reassess, but also in the meantime we suggest that you use Rocket Money to help you assist in the budgeting process. We're really going to be pushing a zero-based budget as we move forward so that all of our expenses are accounted for and every single dollar we're spending has a proper place. So next things we wanted to look at here were freeing our budget. So the first step we wanted to do was cut out those elective expenses. So those expenses highlighted in yellow, trying to see where we could really reduce them down and just cutting out Big B to only one time a week instead of 4 times. Switching our phone plan, that's going to help us lower our monthly expenses. And also if we switch to Total Wireless, we can get a new phone free for Mateo for his birthday, included with the plan, and save money on our phone plan. Some other things we're going to look at are switching our gym to Planet Fitness, reducing our Xbox purchases with a Game Pass, cutting down on Amazon and DoorDash, and some of those other just elective expenses that if we just cut a little bit out of all of them, we're going to have a lot of money freed up to put in other places.
Yeah, so for our transportation, Sophia, right now you are driving the Chevrolet Traverse. You have 1 month left on that lease. We recommend that after that, you and Rosa will actually split driving the Ford Explorer. Doing that, you guys will split the loan payment on that car and pay $313 per month. For Miguel, right now, driving the Ford F-150 and experiencing some wear and tear, we recommend that you purchase the 2017 Chevy Silverado. You'll gain $2,000 in equity from selling the F-150 and buying the Silverado. With that $2,000, we recommend using it as a down payment for Elena's new Honda CR-V that we'll purchase for her as her first car. Doing this, we'll have the $2,000 down payment, which will leave us with $7,900 left on her car loan.
So now looking at our emergency fund, a good emergency fund should really cover 3 to 6 months of expenses. So looking at that required monthly expenses, only the stuff that was highlighted in blue. Right now, once we fix our budget here, we're gonna have around $3,500 in those required expenses. So our minimum amount in our emergency fund is gonna be around $10,700. Since we're starting at $0 in our emergency fund, we wanted to really focus on investing into a high yield savings account. The one that we looked at with Capital One has around a 3.2 APY. So we're gonna begin investing around $1,200, the leftover money in our budget from month 1. And then we're gonna put that into our high yield savings account. And then after that, for 19 months, we're gonna contribute $500 a month into that account. And then down here, we're gonna end with around $11,500 after month 19. So that's gonna be even a bit above our goal. In comparison, if we use a regular savings account, we're gonna be just under that at that 19 months. And this is just a better option for us overall.
So for our credit card debt, right now we have $4,200 on the Capital One card and $1,450 on the Amex. What we recommend is using that tax refund of the $4,200 to pay off that much. And for the remaining $1,350, we recommend using our positive cash flow that we are getting from adjusting our monthly expenses to pay off the additional debt.
So for the renovation, for the additional room for one of your family members, we would ask that you consult Rosa that she might contribute for the renovation. And the reason we decided to go with the renovation as aside from a home purchase was we did a present value equation using the current mortgage rate, well, the current mortgage and the current insurance rate. And if you kept your payment the same with the current insurance rate, the new house's value total would be $292,000 compared to your $280,000. You would only gain about $13,000 of value keeping it the same while adding another 16 years to your loan payment. So it just didn't seem like a reasonable option if we wanted to keep our expenses as low as possible. And then if additionally, we would like to ask Rosa to chip in a slight bit with groceries and eating out, streaming services. As right now, we're eating out a ton, and we do hope to reduce that, but her chipping in would help the family as a whole, since they are paying for everything.
So next we're gonna look at paying for college. So right now both the kids don't have any money in their college funds. So the first thing that we wanna do is we're gonna open a 529 for both of your children. And we wanna invest in VMFXX because that is going to keep up with inflation and also has a really good rate of return. And since that's state sponsored and tax free, we think that would be the best option. We really wanna utilize the dual enrollment and early college programs that are offered within Macomb County since you guys live within Macomb County. So essentially, we would start building up credits her senior year of high school for Elena. And then 1 year after that, the school would pay for her to continue 1 more year, and then she could transfer to an in-state tuition where she would only go for 2 years, and then we would have significantly lower college costs. As long as it's within the Michigan transfer agreement, we can take those credits. On top of looking for scholarships in part-time employment, that will also help reduce these costs. But for now, investing in this 529, we're gonna start contributing $517 a month for Elena's for 5 years, because that's gonna be the amount of time before she goes off to the in-state institution. And then same for Mateo, if we continue with this plan, we're gonna contribute about $265 a month into his 529 for 9 years. And then if they decide to go not with this dual enrollment method, we can discuss and reevaluate later. And also, if they decide not to go to college at all, we can roll this into their own IRA accounts for them. So, set us up well.
So for life insurance, currently only Miguel, you have life insurance, and the general rule of thumb is 10 times your income with an additional $100,000 for your per child for their education expenses like college. So using this rule, the values we came up were $980,000 and $660,000. and these would be term life insurance policies, and instead of whole life, because that's much more expensive. And also term life, the 20 years, that would get you until your kids are out of college, they have their own families, they can support themselves, so life insurance wouldn't be as pivotal. And for Rosa, since she is a 76-year-old, a life insurance policy for her isn't really reasonable with the budget, and really they only offer end-of-life insurance policies, and not really whole life term for people at this age.
So for our retirement funds, Miguel, right now you are contributing $100 per month into your Roth IRA. Your employer offers a 50% match up to $4,000. Our goal is to be able to get that full match, and by doing that, we first have to wait approximately 19 months to fill up your guys' emergency fund. Once that is over, we will contribute around $667 per month into Miguel's 401k, and this will give us the full match for that 401k contribution. Right now, we have a value of around $82,000 for your Roth IRA. If we stop contributions right now, and we invest it into like a Vanguard S&P fund, we'll end with around $740,000 by the time you're 65 if we end contributions now, which is already a great start. For Sophia, you have $18,400 invested into a bond mix. We recommend that you also move that into a Vanguard S&P fund. This will be more aggressive and will also just be able to grow faster than what it already is. This will give us around an end balance of $225,000 based off of historical returns of that fund. And for Miguel's 401k, we'll have approximately an ending balance of $685,000, and that is contributing $667,000 a month after we are done paying off our filling up our emergency funds. So with that, retirement at 65 is very realistic as long as we move those contributions from the emergency fund to their retirement accounts. We'll have approximately $1.7 million in retirement savings when combining the three funds.
Now we're to our final monthly budget. If you want to look at the last page in your folder, it will show color blue is required again, yellow is elective, and the first month is slightly different just because we have to account for your tax return and other sources of income that you have just that first month. And then after month one, it's going to be a pretty steady budget. As you can see, it is zero based. All your income is accounted for in your expenses. You will also notice that Rosa now has a $500 in her contributions to the family. This is just for basic utilities and different needs that she is having paid for by the family. Thank you.
Well, we'll have some questions for you. These are really sharp.
These are nice.
Yeah, they really are. As much as I'm taking notes and stuff like that, this helps me, and always a takeaway is nice. So yeah. Let me look at a few. Jot it down here.
I had a question, just confirmation. You have the emergency fund as an elective expense. And I think you referenced utilizing that to add it to the IRA, is that correct?
Yeah, so we're gonna take, once we bill our emergency fund, the contribution that's listed on our budget,
Yeah.
that $500, that's gonna go for retirement. So
Okay.
we're not gonna like break down our emergency fund, it's just transferring that
Okay,
contribution.
so moving forward, will I still be contributing anything to emergency fund?
We would reassess that after 19 months. We'd probably just reduce that payment down once we have those expenses covered.
Okay, perfect.
Once I get these credit cards paid off, would you guys recommend closing the cards or?
Definitely not.
No?
Closing cards can negatively impact your credit score, as credit utilization is a large part of your overall credit score.
Okay.
And keeping them open and just stagnant would be better.
Keep them, okay. And then when I get the buy now, pay later, Best Buy, when I go buy appliances and stuff, good idea or not so much?
Not so much
Gotcha.
usually. Just make sure when you do make these payments, try to fit them in your budget.
Okay.
Because buying them just straight out rather than using a buy now, pay later loan, it's just like, it's a coupon, but in reverse. So you're just like paying extra.
Okay.
And that's something we can use our emergency fund too, if it's an unexpected expense, once we
Okay.
have that built up, so you don't have to rely on those buy now, pay laters for those quick expenses.
Savannah, anything you wanted to follow up on? Yeah.
With Elena starting to drive, would you recommend that she contribute at all to those transportation expenses?
That is a good question. I would for sure say that she can contribute to some of those monthly payments on the loan. I say that I recommend that you guys pay the down payment of the $2,000 from the equity gained on the F-150. After that, I would say we can look at what she has in savings and how much she's bringing in a month, and evaluate that maybe in between like 33 or to 50% paying for those monthly payments.
That would be a good thing to come to an agreement on with her beforehand, just so she knows when she gets this car, how much she needs to pay off of it, and like how much she has to pay in gas, because that is always gonna be an expense with the car. And possibly looking at part-time jobs for her, just so that she has that to be able to pay for it.
And Sophia should just continue as is with her business, her
Yeah.
baking business and that type of thing.
Yeah.
It fluctuates a little bit, but your suggestion is just stay the course?
Stay the course, look for any ways to gain
Okay.
additional monetization.
Okay.
So kind of what she's already doing, but seeking new avenues, since she knows what she's doing right now will lower the profit.
Okay. I'm good on my
Yeah,
notes.
I don't know that I have anything else.
No, I think I'm good.
All right, you guys, well done. Thank you so
Yeah,
much.
thank you guys for your time.
Of
Yeah.
course, we'll let you gather your stuff here. I'll let the next group know we need a few minutes. We'll turn this off, so good stuff. Good to
Thank
meet
you.
all
Great
of you.
job.